From the looks of things, this FTX problem is far from over. After the sudden demise of one of the crypto industry's most notable companies, its former executives and love partners, so to speak, immediately found themselves locked in a bitter court war with one another. Two of FTX founder Sam Bankman-former Fried's business partners pled guilty recently in December to numerous counts of fraud and conspiracy while he was being extradited to the United States from the Bahamas. In addition, released court records show that top executives Ellison and Wang, both of whom were connected to the defunct FTX, have pleaded guilty to several criminal offenses and are collaborating with federal prosecutors. The Securities and Exchange Commission also announced civil fraud accusations against the two recently. And if you thought that sounded bad, well, it seems there's still worse things to come. Hey, hello, hi, people of Econify. Welcome back to yet another splendid video. Today, we'll look at a former executive of Alameda Research and the testimony she's given about what's really happened at FTX with Sam Bankman-Fried. So stay tuned because you don't want to miss this, and in the meantime, like and subscribe to our channel to get more videos like this, and make sure to hit that bell icon to get updates on all our content. Now that that's out of the way, let's get started. Two of FTX's original members, Wang, FTX's co-founder, and Ellison, former CEO of the hedge fund Alameda Research, have both pled guilty to various counts of conspiracy and fraud related to the collapse of the crypto trading platform. According to court transcripts, Ellison admitted before a federal judge in New York that she and her former partner stole billions of dollars from users of Bankman-Fried's FTX exchange and attempted to cover it up. Not to get into too much detail, but these transcripts are truly eye-opening, yet they serve to reinforce what many of us already suspected all along. Well, very little is actually known about Ellison publicly, but people who knew her and an unpublished interview she gave to Forbes way back in October provide a rough portrait of a shy math nerd who rose through the ranks of the crypto industry until it collapsed. Among her peers, young Ellison pretty much stood out as a shining example, and she was a total Potterhead as well. This woman worked as a camp counselor, specialized in writing scripts for live-action role-playing games, and is the daughter of two prominent economists. Her father is the current dean of economics at the Massachusetts Institute of Technology, and her mother is a lecturer in the economics department there. And it's safe to say she had a huge math-filled upbringing in a home outside of Boston. So it seems like she was a bright kid, but unfortunately Ellison's unwavering support for Bankman-Fried's new jazz financial shenanigans sucked her further into a crypto gyre of bluster, fraud, and desperation over the course of a few years. Now Ellison contradicts her pedigree as a result of a risk gone catastrophically wrong, and the eradicating carnage of FTX's collapse becomes clearer as multiple US agencies, including the Securities and Exchange Commission and the Department of Justice, have announced lots of investigations. From 2019 through to 2022, according to Ellison, she was pretty much aware that Sam Bankman-Fried, who runs the cryptocurrency exchange FTX.com, had granted Alameda access to a borrowing facility. And according to her, she was aware that Alameda's FTX.com accounts might keep negative balances in fiat currencies and cryptocurrencies thanks to the specific settings put in place by the company's executives. In essence, FTX.com appears to make it possible for Alameda to continue trading despite the company's financial difficulties, because as we've seen over the past few weeks now, Alameda was apparently not very adept at actually trading or generating money because they lost money during the crypto bull market. So providing them with access to capital to maintain a negative balance was essentially just simply flinging money into a fire pit. Through their agreements, Alameda gained access to an infinite line of credit without having to put up collateral, incurring interest on negative balances, or being vulnerable to margin calls based on FTX.com's liquidation process. So there seems to be a few tangled threads in there that need to be untangled. The first is that all of FTX's money seemed to be going straight to Alameda, and it's possible that Alameda may have lost that money and that FTX would again then get money and invest it in Alameda. In theory, it looked like FTX, as a closely held corporation, utilized its operational revenues to support Alameda, Clearly, if FTX's operating profits were used to subsidize a division that was doomed to lose money, FTX's investors like Sequoia, OTP, and so on would be a little peeved. However, this would still be 1,000 times better than taking money from customers, which is when massive fraud becomes a problem. First off, many users of the platform were not entering a margin trading environment, so their money should have never been used for any of this lending. Second, even if you look at the investors who had gone on the margin trading platform, they may have agreed to ordinary margin trading terms, but they had not agreed to their money being funneled into a fund where another smaller firm had unlimited access to funds that were being used for fraudulent purposes. In her testimony, Ellison says that she was aware that Alameda had borrowed billions of dollars from FTX in order to pay off the billions of dollars in loans she had taken out to finance her investments in the cryptocurrency business by the end of the current fiscal year in June of 2022. And now things are starting to heat up, and not just because it was June. She also claimed to have been aware that FTX would utilize customer monies to back loans to Alameda. And there you have it. It's obvious that FTX used customer funds to finance loans to Alameda, in addition to providing Alameda with unrestricted use of margin trading facilities. In other words, FTX was essentially taking customer funds and lending them to Alameda for research, which is an inappropriate use of customer funds. Furthermore, FTX failed to keep customers apprised of what was happening with Alameda when they should have, and some customers who never even engaged in margin trading had their money funneled into this risky, stupid bond that was never going to actually make any money whatsoever, and that was just too much, and they went way too far. What's even worse is that to hide the magnitude of Alameda's borrowing and the billions of dollars in loans that Alameda had provided to FTX executives and connected parties, the company produced certain fake quarterly balance sheets. And I'm not even sure if the lenders to Alameda Research and possibly investors were ever supplied with those balance sheets. However, with respect to them, they should have received them at some point in time if they were doing any part of their job as big venture capitalists, putting potentially billions of dollars into this company, which is just sad and really negligent. But at any rate, she says that she feels bad about what happened and that it's up to other people to decide whether or not her regret is genuine. She also says that since the collapse of FTX and Alameda in November of 2022, she had worked diligently to assist with the recovery of the assets for the benefit of the customer and to cooperate with the government's investigation, and that she was there to accept responsibility for her actions by pleading guilty. But if I'm being honest, I think she just feels bad because she was caught, and if she really wanted to help customers, maybe don't commit fraud. Well, obviously, I'm not entirely convinced, given that Caroline Ellison is expressing regret after the whole thing has collapsed and that she was evidently engaging in some of these depictions, but I'll let you guys be the judge of that. However, what does this mean for Sam Bankman-Fried? Well, these admissions reveal that FTX and Alameda Research collaborated to deceive customers about customer funds, lenders about Alameda's research true balance sheet situation and riskiness, and maybe investors, presuming those investors did any due diligence. By using the information from Alameda, they avoided ever having to pay a margin call and can even keep negative balances and borrow an endless amount of margin money. Investors have every right to be upset if these risk management practices aren't up to date, despite assurances to the contrary. It's hard to predict what's going to happen, but Sam Bankman-Fried may just feel cornered and resort to claiming he was just a helpful idiot for Gary Wang and Caroline Ellison, that he may have been kept in the shadows for political reasons given that all the partners used to share a single residence. Who knows, that may just be his defense in court, and we'll have to see about that in the coming weeks, won't we? So this has got to be the bleakest Christmas and the worst time of year for Gary Wang, Caroline Ellison, and Bankman-Fried. After pleading guilty to 7 counts of fraud, Caroline Ellison faces many years in jail. Gary Wang, meanwhile, pled guilty to 4 counts of fraud, but his crimes appear less serious. Probably because he appeared to be pushed further and further to the sidelines. Meanwhile, Sam Bankman, already free on a $250 million bond, will likely face additional charges and a longer prison sentence. But still, if you have any thoughts on the Caroline Ellison issue and the whole FTX saga, do let us know in the comments below. Thank you so much for watching and have a wonderful holiday season, and don't forget to like and subscribe to Econify. But until the next video, I'll be seeing ya.